weekend as well. That's the F&O space. But I think the big tech earnings are going to, dominate Mindspace this morning. Infosys reported a beat on its top line in the third quarter. Margins were a slight miss, though. The biggest takeaway is that the company revised its FY23 revenue growth guidance upwards from 15 to 16% earlier to 16 to 6.5%. My colleague Ritu Singh, in fact, caught up with Salil Parekh, who's the Chief Executive Officer at Infosys, and began by asking him on why they raised the guidance despite all the challenges. Listen into what he had to say.
So on the guidance, we've had a very strong large deals win for Q3, and we've had very strong growth in the quarter, 13.7%. Keeping those factors in mind, and also looking at the points where some of our industries we are seeing a different economic environment. For example, in financial services, in mortgages or investment banking, in telco, in high tech, retail, so on. Keeping both all of those factors in mind, we've increased the guidance. Specifically on Q4, we don't provide a quarterly view of that. We only have an annual guidance.
That's right, but the implication is because you revised up the guidance for the rest of the year, will we see a bit of a muted growth? And also, if you could comment on, the EBIT margin, you expect to be at the lower end of what you guided?
On the Q4, so first, with the change in the guidance, typically Q3 and Q4 are seasonally weak quarters for Infosys in any case. So those factors still continue. On the margin, we had a very good operating margin in Q3 at 21.5. We've kept the guidance, which was narrowed to 21 to 22. We've kept it at that level, and we've also made the statement in the comments earlier. It'll be at the lower end of the guidance.
Okay, all right. Well, let's take that discussion forward then. Manik Taneja of Axis Capital joins us to discuss the whole host of tech numbers that we have got. Hi, Manik. Good morning. Thanks for joining in. Manik, the Infosys numbers look good. Revenue growth, be it good deal wins. They've upped their guidance. Margin a little bit of a sore point out there. But what's your sense on the stock from here on? Because there is still uncertainty globally. Go ahead.
So good morning, first of all, and thank you for having me on the show. With regards to the earnings that we've seen across the sector, we've had 3 tier 1 companies report until date for the quarter. And across most companies, growth has been better than what the street feared. And the same thing essentially was true even for Infosys. One can certainly call out that the growth to some extent was led by some pass-through software revenues, which impacted margins negatively. But in the overall scheme of things, growth is still holding up quite well. You've seen growth being led by Europe, which everybody has been much more worried about in terms of how the macro impacts the business in that geography. And from an underlying internal metric standpoint, what you would expect in terms of moderation, in terms of hiring, attrition essentially is the trend across all the companies that have reported. As such, with these numbers, I would doubt if the street would cut numbers as such, and earnings downgrade certainly is set to take a pause, if not a reversal for the companies.
Okay. On HCL Tech, the numbers are fine. I mean, there's a positive surprise on margins, but HCL Tech has actually narrowed its guidance, so reduced its guidance a tad bit on the revenues and the margin front. Would that be a concern to you, or it's something that the management in any case highlighted mid-quarter? But what do you do if you're a shareholder here?
Sure. So as you rightly pointed out, the change in terms of that band, both from a growth and especially from a growth standpoint, is an extension of what HCL Tech called out during the US Analyst Day, when they had suggested that they might be at the lower end of that 13.5 to 14.5% growth outlook at that point of time. So that growth outlook essentially is being fine-tuned now toward a 13.5 to a 14% CC growth. So not an incremental negative in my view. From a margin standpoint, given where street expectations are or have been for the company, and the fact that HCL Tech had been suggesting that the margins might be at the closer to the lower end of the indicated range of 18 to 19%, that is driving the slight reset in terms of that margin band. So I would say the guidance change essentially is a non-event in my view. From an underlying metric standpoint, pretty similar trends as on what saw at TCS or Infosys. Order booking being fairly strong, even for HCL Tech, three large deals accounting for TCV of $1 billion plus in that order book number.
Okay. All right. Manik, I wanted to ask you, we have the initial rates that are coming there. Infosys has opened up mildly higher. HCL Tech is under some pressure, down 2.5%. Do you track LTTS?
So LTTS is a name that's covered by my colleague, not covered by me.
Did you have a chance? I mean, what's the call from your brokerage about this particular DM? Because it seems the street doesn't like it. Large part of their cash is going to be utilized to buy this company. It's a group company as well, and margins will be lower. The stock is opening up with a cut of around 2%. Just want to know, as a house, what's your view on the deal?
So certainly, as you mentioned, basically an acquisition of a related party, and from both a growth margin profile and a focus standpoint, very different from the existing or the native L&T Tech business. This acquisition, essentially, the way L&T essentially is suggesting is that this is a capability acquisition, and they want to essentially take these capabilities to the international markets. We'll have to see as to how this works out, because finally this will mean that they will pivot towards more services mix going forward from an international standpoint, and thereby the expectation that margins should also improve. Certainly, yeah.
I got that, Manik. We'll leave it there. Thank you very much. Just running into market opening. Appreciate your time here on CNBC TV 18. It's 9:10. Mitesh is with us with his 9:10 calls.